Hello, I'm Michael Peltz, Senior BDM for the CSV line of credit product here at Equitable Bank. Thank you for taking the time to join me for this brief introductory presentation on our CSV line of credit products. This presentation is designed to be short, sweet, and informative. I encourage you to connect with me directly for detailed discussion and information. All of my contact information will be displayed at the end of the presentation. Before we jump into the line of credit products, let's discuss Equitable Bank, the bank behind this offering, and who we are. Equitable Bank is Canada's ninth largest publicly traded Schedule I bank with over 30 billion in assets under management. The Schedule I bank classification is important and should give you and your clients comfort in knowing that we are subject to the same rules, regulations, and oversight as the more traditional and well-known Big Five banks. Where we are different is in our approach to banking, which is guided by our Challenger Bank philosophy. The Challenger Bank philosophy means that we focus on rethinking conventional approaches to banking and use technology to stay nimble and provide customers with unique solutions to their financial needs. Simply put, we look to offer innovative banking solutions with a focus on common sense methodologies that put the client first. While much of the bank's business revolves around lending on residential and commercial real estate and deposit taking, our involvement in areas like alternative mortgages, reverse mortgages, equipment leasing, specialty finance, and of course, CSV lending are a testament to our focus on providing unique solutions and serve to highlight what make us different from the more traditional banks. Equitable Bank just celebrated its 50th anniversary of being in business. We got our start in 1970 as the Equitable Trust Company. We hit 1 billion AUM in 2003, had our IPO in 2004, obtained the Schedule I bank license in 2013, launched our online direct-to-consumer EQ Blank platform in 2016, and once again stand at over 30 billion in assets under management. We are a real and valuable part of the Canadian financial ecosystem. So much so that our stock was included as an actual component stock of the TSX index in Q4 2019. As a CSV line of credit product is secured against a whole life insurance policy, it makes sense to take time for a little Insurance 101 slide. Term insurance provides coverage for a certain period. It is not structured to have a cash surrender value and therefore cannot be used as collateral. Universal life is permanent in that it is designed to provide coverage for an entire lifetime, and it also allows for a cash value component. However, the owner of the policy decides what this value is invested in. ULs generally have equity, balanced, fixed income, and GIC type options. As such, the cash component is not necessarily guaranteed and can also be quite volatile as it is exposed to overall fluctuations in the markets. Given this likely volatility of the asset, we do not currently lend against this type of policy. This brings us to whole life policies, which is where our lending focus is. Whole life provides coverage for life. Whole life has a cash value component that offers greater guarantees and sureness of values. Once a value is credited to a whole life policy, it is guaranteed, therefore has no market risk or downward movement in value, and as such is a much better and more secure asset for us to lend against. Here we see the basic components of a whole life policy. They are death benefit and cash surrender value. As many of you know, these two components are very much interrelated and act or move in conjunction with one another. Since our CSV line of credit products lend against CSV values, let's dive deeper into what CSV is. Simply put, the CSV is the sum of cash available within a policy. It very much represents the present value in dollar terms of a policy. It is the amount of money an insurance company would give to a policyholder should they wish to terminate their policy. Death benefit is an event-driven, that event being the death of the insured payout. CSV payouts or access are also event-driven, but these events are driven by the policyholder while still alive. It is for this reason that CSV is sometimes referred to or viewed as the quote-unquote living benefit of a policy. CSV is the value a policy owner can access while still alive. Growth of the CSV within the policy is a non-taxable or tax-free event. However, the way in which a policy owner chooses to access this CSV can in fact create tax implications. CSV lines of credit are an ideal way for policy owners to avoid creating a taxable event when looking to access the value of their policy. As just noted, there are a few ways in which a policyholder can choose to access the value within their policy. The ability to access the CSV via a policy loan directly from the insurance company or via full or partial surrender of coverage are rights that are embedded within the policy itself. However, using the insurance policy to secure a loan from a financial institution like Equitable Bank is often determined to be a more effective method that has many benefits for the policyholder. First, accessing of these funds via collateral loan does not create a taxable event, whereas a policy loan or access via surrender may in fact do so, depending on what the ACV or adjusted cost basis of the policy is. Secondly, the interest rate associated with accessing funds via collateral loan is often much lower than doing so via policy loan. Finally, a collateralized loan will often provide the policyholder with much more flexibility in terms of how they access the funds, how they choose to service the loan, and also how they wish to repay the borrowed funds. A CSV line of credit from Equitable Bank provides the borrower with maximum flexibility, choice, and control. Setting up a CSV line of credit is very straightforward. At Equitable Bank, we have two CSV products, CSV Flex and CSV Max. We will get into these on the next few slides. However, the process for setting up these lines of credit is effectively the same. Policyholder will fund the policy with the premiums paid. These premiums will create CSV value that grows tax-free over the life of the policy. When they wish to access this value, they will apply for a CSV line of credit, and we will look to approve them, take an assignment on the policy, and advance the requested funds to their bank account. Once again, these advances are tax-free. The borrower can choose to repay the borrowed funds as they see fit. With the security on these loans being a life insurance policy, it is very feasible to assume the loan will be repaid by the death benefit payout. The remaining death benefit will flow to the named beneficiaries as per the policy owner's instructions. The policyholder is and continues to remain the owner of the policy throughout. Now, let's focus on the products themselves. Our first product to be launched was CSV Flex. This product is designed to allow for borrowers to access a portion of the CSV within their policies and does not require servicing of the loan. The borrower can choose to let the interest capitalize if they so desire. In order to qualify, the life insured or the youngest life insured on a joint policy must be at least 50 years of age. The approved amount is determined on a case-by-case basis, but is a function of the borrower's age and the current and future CSV values. While CSV Flex may approve at 90% of the current CSV, a quote-unquote typical approval amount relative to current CSV would be in the range of 45% on the lower end and 75% on the higher end. In terms of how we calculate the approved amount, we essentially start at the end point and work backwards to the present day. This endpoint is a very stressed mortality assumption, generally age 98 on male lives and 100 on female lives. Using the graph as an example, here we have a female borrower who's age 75. The current cash surrender value is 1.645 million and is projected to grow to 4.07 million. What we do is once again start at the end point. We determine what we would be comfortable with the maximum loan amount growing to over this amount of time. So we look at this and we very much are comfortable with the loan growing to 3.87 million and very much deconstruct or decapitalize, deaccumulate the loan to the present day. So in this scenario, if the borrower came to us at age 75 with 1.6 million current cash surrender value, we would be very comfortable approving her at 1.17 million. And be very comfortable knowing that if she chose to take the 1.17 million all at once and choose never to make a payment against it and then let the interest capitalize and the outstanding loan balance grow, that growing balance over time would always be supported by the current and future cash surrender values. Next, we have our CSV Max product. It is different in that it is designed to approve at 90% of the current CSV from the get-go. We are able to target the maximum approval amount from the get-go because it comes with the caveat that the borrower must service the interest. This requirement to service the interest results in two key differences relative to the CSV Flex product. Firstly, there is no longer the minimum age 50 requirement. The borrower must simply be age of majority. Secondly, the requirement to service interest does add in a component of financial underwriting. In terms of the financial underwriting, we simply need to have a process that ensures the borrower has the financial capacity or capability to meet the potential interest servicing costs. As a result, we have a very common sense approach to this financial underwriting aspect. It is a process that is designed to look for an approval as opposed to a decline. So once again, focusing in on the graph and how it would work over time. Initially, we would determine what the current cash surrender value is and approve them targeting 90%. As the cash surrender value grows year over year, there's every opportunity for that borrower to come to us on an annual basis and look to refinance and effectively increase their approved amount to take advantage of the ever-increasing cash surrender value. So in effect, they can create a step-up approach to how they access the funds or how much funds they have the ability to access. That concludes this brief introduction to Equitable Bank's CSV line of credit products. I encourage you to please connect with me directly to have a deeper discussion. Thank you very much for your time and have a great day.